The streaming mining business was pioneered by Silver Wheaton. Since being founded in 2004, the company has grown to an $8.4 billion market cap. We talked to the CEO on what it's like putting together mining deals with the decline in gold and silver prices. Who are you?
I'm Randy Smallwood, President, Chief Executive Officer, and a Director of Silver Wheaton.
Can you explain what a streaming company is?
Sure. A streaming company is it's a business model that we started with Silver Wheaton back in 2004. We founded the company back then. It's based on buying the rights to a percentage of byproduct metal production. Silver streaming is what we focus on, although we do a bit of gold streaming. And basically what we do is we pay up front for a percentage of whatever byproduct gets produced over the life of that operation, the life of that mine.
How does the streaming fit in between debt and financing?
Well, it's a means of financing. It competes up with normal debt or equity financing, and so it is an alternative form. We like to look at it, especially in these times, as a method of divesting of non-core assets. What we've changed is the way you define a non-core asset. Typically, that's usually been defined by property boundaries. Now, what we've defined is there is a way to sell off your non-core assets, your byproduct production, and focus on your core franchise, your core focus. Most silver is produced as a byproduct, and so it's a big market for us, and it's really opened up another alternative for financing mining.
When a project comes to you, is it important that they also have a debt piece and an equity piece as well?
Well, what's important to us is that the project is strong enough and it's quality enough to handle whatever burdens the company is taking on when they do this capital development, when they spend this. And so we have to make sure that the project has that strength and has that moving forward. We won't invest into a project until we're comfortable that there is enough financial backing in that project that it's able to move forward comfortably.
What is a good project? When you're looking at somebody that's coming to you with a deal, what are some of your chief criteria?
Yeah, no, it's a very good question. Quality. We look at the operating margins of these projects and we focus on assets that are in the lowest half of the respective cost curves. So again, we're looking at copper mines, we're looking at lead zinc mines, looking at gold mines, and what we want to focus on is assets that have production costs that are down in the lowest half of the cost curve, because that gives them the capacity to handle ups and downs in the commodity price cycles, to handle management challenges, to handle any challenges as the project goes forward. We want to make sure there's enough healthy operating margin there to handle that and the streaming contract itself.
When you're doing the due diligence then to see that as a quality asset, what are you looking at? How do you do your own technical assessment of the potential project?
Yeah, we're very technically focused. Silver Wheaton, I'm a geological engineer. I've been focused on project evaluations for the last 15 years, dedicated towards that, and we have a very strong technical team. I think if there's one thing that Silver Wheaton's built itself on, it is that we put a lot of effort into our technical due diligence to get comfortable. And it's not always looking for red flags, it's also looking for green flags, for opportunities in these projects. Sometimes we see things better than what the operator says. Pretty rarely, but sometimes we do see that.
Obviously, the equity market has gone away right now with the tough metal prices, and also you also said recently that there is opportunity, though. What is it like making deals in this market?
For our company, there's lots of opportunities out there. The first hurdle, of course, is the quality, right? We, in terms of going through, we don't move forward on too many projects. Once we get through the first round of due diligence, there's not too many of them. It's a pretty low percentage in terms of actually getting through that side. Good quality projects always have a way to get finance going forward, and so we still see lots of opportunities, mainly because the debt and the equity side has tightened up so much. European banks were traditionally one of the biggest lenders into the mining space, and they, of course, have closed out shop and are trying to rebuild their foundations going forward. So that's opened up quite a few opportunities for us, and we're busy. But again, when we look at assets, not too many of them actually make it past all of our hurdle rates in terms of quality.
Do you have a crystal ball? What is your guess what's going to happen over the next year or 2 years in the markets?
Commodity prices are of course driving what's going on right now, but there is really a shift out of the mining industry in the resource sector, mainly because of overpromise and underdeliver. There's been all sorts of cost surprises both on the capital side and the operating side that have really hurt the industry in terms of respect and trust with respect to shareholders out there, and the industry. There's movements within the industry to rebuild that trust. This all-in cost accounting that's being supported by companies like Goldcorp and the World Gold Council and such is something that I think is really required to sort of try and rebuild that trust going forward. Obviously, commodity prices are going to drive what happens over the next year. I do think we've got to be, I'm confident we're closer to a bottom than we are to a top. The cost of production is very close. The all-in cost of production, a lot of these mines, along with capital investments, it's pretty close to the spot price in terms of what we're trading at right now. So I'm confident that we've reached a bottom, and now it's a matter of just surviving through until we start getting some momentum again going forward.
Can you give me an assessment of Pascua-Lama right now?
Sure, it's a great asset. I think it's going to be one of the best gold mines, if not the best gold mine in the world. For its first 5 years, it is an incredible operation, and it's going to be a core franchise within our core operation within Barrick. It's also going to be a core operation within our company itself. Barrick's had some challenges in terms of moving forward. It's a very tough location. It's a very tough asset to build. It underscores how good the asset is in terms of, even though it's in that tough location, that tough place to build, it's still worth going forward, and Barrick is very committed to moving it forward. We're very comfortable with what we see from Barrick. They are very committed. They've made some changes in terms of their operating procedures going down there. The path to production is not impacted yet, but we're confident that they'll work their way through these challenges, the permitting challenges they have within Chile right now. We know the project can be built and operate within environmental guidelines and such, and so we're very confident Barrick will be there, happy to be their partner.
Do you have, can you say what size of business Pascua-Lama is, or I should say Barrick is, within Silver Wheaton?
Well, we get 9 million ounces a year for the first 5 years from Pascua-Lama. It does drop off after that. Over the life of the mine, we average about 5.5 million ounces per year. It's a 25 to 30 year mine life. I can't remember the exact life. So it's going to be a substantive portion of our production. I mean, current, if we don't make any more acquisitions between now and 2015, it'll be about, on average, 20% of our production after 2015. I have a feeling we will make some more acquisitions in this market. There are opportunities out there. So Barrick's probably about 15 to 20%, I would say, in terms of the way to look at it.
With the declining commodity prices, is there a change with government regulations or with social? Those are always hurdles that exist within. Do you see any changes with that, or does it just always maintain the same type of hurdle level?
Governments are hungry right now for taxation. They're trying to, I mean, it underscores one of the theses that why we like precious metals is that governments are overspending and under-collecting. So they're trying to improve on the collecting side in different ways they can. So there's no doubt we see that. All of our contracts are structured such that we leave the responsibility within the country of managing within country operations with the operators themselves. They're the ones that have the operating presence there. They're the ones that have the relationships with the governments and such like that going forward. And so our company isn't exposed to that. Our structures are such that that risk is left with the operators themselves.
So in this market, again, you're still doing more deals going forward?
I sure hope so. I mean, the opportunities are definitely there. As tough as the market has been, the streaming companies, we've survived it a little bit better than your average mining company. It still means we haven't done well overall over the last couple of months, but we're definitely in a stronger position than your average mining company over the last couple of months, and I think it's put us in a good position to continue growing our company going forward.
Talking to another streaming company, they're seeing growth within this particular sector within streaming companies. What do you see for streaming companies in general over the next decade?
Most definitely. If you're successful, you're going to have people copy the business model. You're going to have people that want to go forward with that. And so, we started off the streaming model back in 2004. It's interesting that the traditional royalty companies are now pretty well streaming companies. The bulk of their revenues, or a large portion of their revenues, come from streaming. It's a business model that's strong, it's sound, it gives a good focus. It's got plenty of opportunity to grow, and it's why in 8 short years we've built this company into the largest streaming/royalty company in the space itself. Streaming gives great exposure to good quality assets and delivers lack of cost risk to shareholders, and so it's opened up a lot of opportunities.
Do you see opportunity for streaming beyond precious metals?
I don't think it works as well. One of the things that we saw when we originally started Silver Wheaton was the fact that we had silver production. A lot of silver production was buried in base metal production. 30% of silver comes from copper mines. Another 20% comes from lead zinc mines worldwide. it doesn't get the same valuation, doesn't get the same attention in there. And so there's a definite arbitrage in value when you bring it out of a base metal operation and bring it into a precious metals producer. You don't get that arbitrage going the other way. In fact, it's the inverse. If you're pulling a base metal stream out of a precious metals mine, some would argue you'd probably lose some value in terms of going through that. The base metal operation probably gets a bit more value having that precious metal credit. So there's not as much incentive. It becomes more of just a commodity play than sort of value creation when I see it coming out of precious metals.
Analyst was mentioning that one thing that a streaming company will help an investor with is that it will do technical analysis of a mine.
Yes, that's correct. I mean, we do have a very strong technical reputation. I do think that we add a check mark to a project when we go through and tear it apart. It's a second set of eyes. It's a second technical team that has gone through and reviewed the project and signed off on it going forward. The smaller the company, the more value that adds in terms of market confidence and marketability. It is something that we take great care in protecting. That's a reputation that I take a lot of pride in, but it's something that we also defend with great, but we do add that value. And it's one of the areas that I see some opportunity is in this market, the potential of mergers and acquisitions out there, where we actually stand beside an operating team or an acquirer or a potential acquirer, and as a second technical team, validate the project for acquisition and have two different technical teams sort of sign off on the value of that project going forward. I think there's some real value in that, and so it's one of the areas that I see some potential opportunities for us in the near future.
Thank you very much.
Great to be here. Thanks, Mike.